Ivan, kind of talk to us a little bit about, what you don't like about traditional finance. Like, let's just get right into kind of like the nitty gritty. What don't you like about traditional finance, Wall Street financial advisors, and like what separates you from the rest, and maybe what inspired you to do something different? Because you're
Yeah.
definitely doing something different, and I love
Yeah,
that.
yeah. I mean, and the business today, it grew from just one person, and now it's eight of us, and we run it lean and mean, and it's highly effective. But its roots really go back to when I was working on the investment banking side of this business. And investment banking, I mean, it sounds like, when you hear that word, people immediately go, ooh, it's like investment banking. It has this cachet,
Hot
supposedly.
shot.
Yeah, yeah. It's supposed to be like this really elite thing. And I don't know if I ever really felt like it was a very elite thing because I was, working at companies that were developing product, distributing product, and who did they distribute the product to? These different funds that would get manufactured and distributed, they would get distributed to financial advisors. Financial advisors would then dial for dollars. You buy everybody in the office pizza. Everybody stays late. Everybody's dialing for dollars to sell the product. And you do that. So I did that for about 10 years, the first 10 years of my career out of business school. And, you can be pretty effective. I mean, that's the machine of Wall Street. It's product development, product creation, product distribution, product sales, and even IPOs. I mean, think of it this way. Even an IPO, when a company brings its stock public, that stock is a product. Of course, it's a share and ownership in a business, but it's a product. It's been priced by a group of people that kind of have a black box as to how they're determining the valuation of that business. And then they come to market with it, and then everybody can buy a share. And sometimes, the IPO price is X dollars, and then it's like 50% of that by the end of the first day. So how good a job did those investment bankers really do in valuing that business? And so there's just kind of like there's a lot of inside baseball with the business, and it's a big black box. I don't think the industry likes it when you expose all the inner workings of it, where the fees are, where the work is, where the real value is. If you're a client, if you're a customer, and you're consuming financial products, you should be able to determine how you're really benefiting from it or not. It should be kind of a 0 or a 1. And the industry really doesn't take that approach at all. It's all, it's all relative. I mean, just to give you an example, I've seen performance reports, when you have a portfolio and then you have your portfolio invested and then you have a benchmark that you're comparing yourself to. I have seen some firms actually construct a benchmark comprised of 15 to 20 different components that all kind of match perfectly the allocation inside that client's portfolio. And I look at that and I go, who the hell is ever going to understand that? It is so I mean, the financial advisors who are doing this can barely understand it. The clients certainly aren't going to understand it. What do the clients actually understand? They understand the S&P 500 was up or down today. The Dow Jones Industrial Average was up or down today. That's basically the extent of what most people, forget about the U.S., but in the world, really understand. Is the market doing well? What did the market do today? The market, the S&P 500, that's what it did. Did my portfolio do better or worse than that? And if it did worse, why? If it did better, nobody really cares. But if it did worse, people want to know why. And there can be a very good rationale and story as to why. But our industry really doesn't. I just feel like it doesn't do a good enough or complete enough job because there's all this like funny shenanigans around it, like the example I just gave you with this crazy benchmark with so many components. It just makes it confusing by its nature.
Yeah. And so the book I wrote, I feel like I'm in like a freshman JV and you're like varsity because your book just kicks my book's ass. And so my book, I talk a little bit about Wall Street's like dirty secrets. And am I right in the sense of to me, it's just by design, right? If they can make, good old Ruth out in Kentucky, who's got $300,000, just so confused and like bury all of the fees and make these words that are just really, really hard to understand and not really educate Ruth. It's just like out of sight, out of mind. Ruth doesn't ask questions. Advisors make their fees. Right. And it's like Ruth knows no difference, right? Like that's really the design of it all. And I think actually insurance is probably a little bit worse than that, right? Because insurance is even more complicated.
Layers and layers of fees. And yeah, financial products, whether it's a mutual fund or an exchange traded fund or and by the way, I mean, there are many great funds out there. There are many great fund sponsors out there. There are great, I mean, huge multi-trillion-dollar companies that have products that cost, 2 basis points, 1 basis point, 3 basis points, which is 0.03%. Just very cheap index type product. Yeah. And this, so there are a lot of benefits that have come out of the, financial sector, really democratizing access to baskets of stocks, and that's a very, very good thing. I think the flip side of it is there's a bunch of other stuff that's also come out of the financial sector that's very, very confusing. And one of my mentors, somebody I worked for as a VP at Fisher Investments many years ago, Ken Fisher. Ken Fisher is notorious for hating variable annuities. Well, he doesn't call out variable specifically; he just hates annuities. And his main beef with it is the fees. Yeah, because you're dealing with M&E expenses, the expense ratios of the funds,
riders,
the riders. I mean, so you easily in a variable annuity could be paying 4% very easily, and of course, that 4% is deducted from real contract value money. It's not some fictional deduction that they're making. They're making the deduction from the actual contract value. And that can be very, very painful, especially in a bad market situation. So, but insurance companies are very smart. They've designed these products to basically, essentially, in my estimation of what they've done, is they basically have made them like a single premium immediate annuity. They have just burdened it with so many fees so that it essentially turns into that over some period of time, especially when you go through a full market cycle and you hit a down patch of performance. Those big fees just basically wipe out the ability of that account to recover. And so you're going to get that income benefit now for the rest of your life, and you'll still get that guarantee. But it's basically, it wasn't sold that way. It was sold with the promise of upside potential. We're going to give you the ability to invest in the markets, have the potential for growth, but you're going to have this downside protection, guaranteed income for life. Well, in reality, that upside potential really has a very slim probability of ever occurring because of this fee dimension, which just, it's a burden that the contract cannot outrun. And that's like a dirty little secret. Yeah. This isn't, I'm not saying anything here that an actual real professional advisor, they can argue with me all they want about it, but the reality is when you're looking at 4% fees. So, of course, this type of conversation has put pressure on the industry to make these products less expensive. Yeah. And so you do see, companies actually now coming out with, maybe the top end cost is 2%. Okay, well, that's some improvement actually.
For sure. A lot.
So that's, I think, what it's about. It's about advisors and certainly clients knowing exactly what to be asking. What's my real cost here? What am I really paying for? Yeah. What about the internal expense ratios for this thing? And then, of course, an advisor will look at you and say, "Oh, you know about those?"
Yeah. Dang it, Ruth, you learned a thing or two.
Right.
The pivot I want to make with you. So I think the audience would really love to hear some of your backstory. So I know you're Cuban, right? You've got your grandfather that had some crazy stories with Castro and Che Guevara that I want to get into. I selfishly want to get into this conversation because I don't watch a lot of TV, and the winners listen to this show, right? How winners win. The whole premise of this show is to interview winners like Ivan, right? And I really think that one of the keys to winning in life is just not spending hours and hours and hours watching television that makes you dumb. Instead, watch pointless documentaries that you're never going to use, right? So that was a joke, guys. But I'm actually going to use this documentary with Ivan to help our conversation, because one night I couldn't sleep, Ivan, and I love history, right? So like Netflix and documentaries, that's my jam. If I'm going to watch Netflix, it's documentaries. And I watched the one, I think it was called like Cuba Libre Story, and it just talks about how Cuba became Cuban. I think most people hear Cuba and Cubans, they think of people driving like the Jetsons cars, right? Like those old school cars out there, right? And you probably have heard that, out there in Cuba, they're not driving the newest cars. They're like stuck in time, right? It's like going back in 1950, 1960. So I was just enamored and wowed with the story of like how much resources there are in Cuba and how many other countries came into Cuba and really just tore that country apart, man. Like so much greed, and I felt really bad for the citizens of Cuba. I feel like they got the short end of the stick, right? There's a lot of politics, a lot of poverty. I know they're still going through their struggle. So kind of share with the winners a little bit about your family and your history and some of the things I mentioned there.
Yeah, my father's side, they're from Cuba. I was born in D.C. after they got out after the revolution, but many years later. But, when I was a kid, my grandfather would talk about his time, as the undersecretary of the Treasury of the Castro revolutionary government, and he wrote this book. So he was really my first mentor. He was really the guy for me. He was kind of like a force of nature. He was mystical, magical. He was larger than life. He would do TV all the time. He would do Radio Marti all the time. And, he wrote for the Miami Herald for many, many decades. And he was a great economist. And so to get this guy's attention, I had to figure out how to speak his language, not Spanish, speak the language of economics, speak the language of monetary policy. I thought it was totally normal that everybody talked about monetary policy at a dinner table. It was like I had no real appreciation for the opportunity I had as a kid to interact with someone like that. But yeah, there's that one story that always sticks out in my head of, he said, well, it was an awful bloody time. His friends and colleagues were being placed in dungeons, murdered, publicly executed. And he had some friends who were looking out for him. Some cabinet members were looking out for other. It was just a wild time because the revolution occurred, and my grandfather was pro-revolution. This was to get Batista out. Batista, this is like the classic example of the devil you know is sometimes much better than the one you don't.
Yeah.
And Batista was seen as a devil, totally corrupt, taking advantage of the people. Well, in hindsight, he was an angel compared to what came in there and what Castro did to that country, which still, decades, generations later, suffers. And so he was part of this revolution. He was one of the first cabinet members in the revolutionary government. And it wasn't until like a few months goes by that he realizes, well, wait a minute, the power isn't leaving Castro and his cronies. The power is actually being consolidated more and more with Castro and his cronies. And cabinet members started disappearing. And so basically the power was not going to go back to the people. The power was all going to be concentrated now with this dictator. He had all the guns. He had all the weapons. He was the head of the military. So, it was just a major betrayal, a betrayal that is very hard for me to even fathom, like what that could be like. Here you are actually serving and being pro something only to have that thrown just horribly in your face.
Yeah.
And so I think that pain and sort of that, I don't know, maybe that that guilt, that failure of being able to identify that this guy was really this psycho that was going to do this, and he couldn't see it coming. I mean, nobody could see it coming. I think that he lived with that till the day he died. It was something that just really haunted him. And so, of course, he devoted his entire life really becoming the most foremost anti-Castro economist in the world, and really outlined the kind of detriment that this administration, that this regime basically caused on its people. This thriving, incredible country with so much natural resources, so much export. I mean, they were a global export leader.
Like sugarcane, right?
Sugarcane.
Yeah.
I mean, it was. I mean, and rum and cigars. I mean, all the wonderful things in life.
Right.
It's like unbelievable thriving economy and people, and it all came to a screeching halt because of this. And so he told that one story to me about Che Guevara putting a gun to his head to sign economic policy that my grandfather certainly did not agree with. And he would look at me and he'd say, "Ivancito, I only had a pen. He had a gun, so I signed." And he kind of laughed it off a little bit, but boy, I think there was a lot of pain in there, and I think, and of course later on, Che Guevara has been kind of celebrated in U.S. society.
I was actually going to bring that up.
And it was very weird because, people would wear shirts and it was like on murals, on walls all over the country as if he was a hero. And I'm like, I don't think people really know like what this guy represented and what he did. That it's like, this is a classic thing of watch what I do, not what I say. And I think a lot of Marxist movements and like intense socialist movements have really actually beautiful language at its core of, the oneness of people and the egalitarian nature of a society and sort of something to strive for, like a heaven on earth type scenario. Well, it's never happened. It's never actually come to fruition. And people, once they have power, will abuse that power in ways that you can't even imagine. And so that was my first economic lesson. It was, be careful what you think you know. Imagine that, like, being 10, 11 years old and like that being your real core understanding of economics. Be careful what you think you know, because it can change like that overnight. It can become something completely different. And my grandfather would even say, be careful of the country you think you know. Because, of course, he was betrayed by his country. I mean, it happened. It just kind of happened. And so I think those are really important things when it comes to money management and economics. And when you evaluate, where do you put your money? Which is basically a proxy for where do you put your trust? Do I really believe in this thing? Do I really understand this thing? And I think there's a lot of room for improvement.
Yeah, for sure. I think understanding and knowing history, one, it does a couple of things for anyone that wants to learn and just take care of that itch, right? Just knowing history throughout the world is important because, it's going to satisfy that itch. Two, man, it gives you a different perspective, right? A lot of gratitude, helps you appreciate the country that we live in, right? A lot of people love to complain about America and, how racist and terrible the country is. And like you just said, is there room for improvement? Absolutely. But man, I couldn't imagine living anywhere else, any other country but United States of America. We are so lucky to have what we have. I wanted to go back to Che Guevara because I've never asked this question. I'm glad you brought him up because I've never asked this question, one, period, but two, from someone that has just the knowledge and experience that you have. So, I'm watching that documentary. I'm just like, man, like, how can people support Castro? How can people support Che Guevara, man, like these guys just shit on their friends, their fellow citizens. Like it just blew me away. And everyone has heard of Cuban rum and Cuban cigars and Castro, right? So like everything that, Ivan and I are talking about, like I know you guys have heard a thing or two or not, but Che Guevara, right? You see him on shirts. I think what made him be a lot more popular was Colin Kaepernick, the whole him kneeling during the NFL anthem and just like that whole, chaos that was created, that controversy. There was one side and the other side. And
resistance fighter. It's sort of this idea of this is the anti-hero. This is someone who is going against the grain, and Che was very much that. I mean, and he really was he romanticized he was the romantic rebel warrior, and it was fighting against the establishment. So the great irony is they became the establishment. I mean, so it's like, but people, and this is not like a one-off situation. I mean, we have seen throughout history where people in different parts of the world at different times, they got swept up with a particular cause or message or philosophy or and some to incredibly horrific detriment. Is where these, think of Nazi Germany. It's the same kind of hysteria that can basically sweep a nation without being checked. And you'd really like to think that this can't happen again. You'd really like to think that it's, sort of absolutely improbable that you could have a nation believe things that are not true. But I don't know. It's become very hard to see, well, what is truth anymore? It's harder to authenticate data. Look at all the stuff that the tech companies are involved with. Now look at AI, and it's basically, having people say things they didn't say. It's, videos are being created, from this technology. So there's a lot of there's a lot of threat to disinformation, and certainly the government has a lot to lose from that. I think we all have a lot to lose from disinformation, and technology obviously plays a role in it. And I think that these big companies are trying to do something about it. But at the end of the day, people are still just people. People. They're going to be told something. It may resonate with them on some level that something's wrong. I think there's a lot of that today, especially when you get into wealth. Especially this subject is a very highly charged subject when you talk about money and those that have it and those that don't have it, and that's a serious thing. I published something, a bit of research a couple of weeks ago, exactly on this topic, which is since the 1980s, looking at the wealth gap between the top 1% and the bottom 50% within the United States. That differential has increased dramatically over the past 4 decades. We've had Republican and Democratic presidents over this period of time. We've had various administrations. We've had various Congresses over this time frame. None of them have done anything about it. The problem has only gotten worse and worse and worse. And by the way, there's a lot of things that could be done about it. Actually, there's many things that could be done because the government spends a tremendous amount of money every single year on things that don't actually impact the lives of people. And so these are, you start getting into fiscal policy issues and those types of things, but that's very much within the purview of, the kind of work that I do. I mean, you have to kind of look at all this stuff and be honest about, is this going to be helpful or is it not going to really move the needle at all for people in this country?
Yeah. Tell me your feedback on living in California. And I asked this because I lived in California for a long time. Roland, our producer, is from California. Some of the winners may live in California. Some of the winners are like, I never want to go to California because I hear it's just going to shit. You have seen a lot of, what Cuba had going on, right? California has beautiful beaches, but you're also an entrepreneur, right? So I could kind of see you playing both sides as far
Yeah.
as like the pros and cons of California. So what's it like
Yeah.
living there? How do you like living there? Do you think it's going to shit? I will say I used to take my family to San Francisco all the time
Yeah.
over the last 10 years.
It was so beautiful.
And we stopped going to San Francisco about 3 years ago. I mean, it just got bad. I see like heroin needles everywhere.
Definitely.
It's like, whoa, what happened to this this beautiful state?
Yeah, I moved to California from Chicago in 1998. A company I worked with at the time moved me out there to Southern California, and it was like a dream. I mean, it was negative 20 below wind chill in Chicago at O'Hare when I got on that plane. It was 74 degrees and sunny when I got off at Santa Ana Airport in Orange County.
Oh yeah.
And I got off that plane. I looked around. I said, "Do people freaking know about this? Like, I mean, this is like unbelievable." And it was beautiful.
Yeah.
And it was pristine, and hippy dippy, and I really enjoy the spiritual and the crystal people, and I think it's nice to see that kind of like casualness
Yeah.
in culture, and so it has changed dramatically, and I don't know when it really started, but certainly the pandemic was a major inflection point
Yeah.
for the state. Certainly where I live, in the Century City, Beverly Hills area. I mean, people are now shocked on Rodeo Drive. I mean, people in restaurants on Rodeo Drive, just off Rodeo Drive, like right there in Beverly Hills. People are now being shot, mugged, escorted from the store to their cars. I mean, it's like a war zone almost. I mean, it's and you really can't believe this is what it has become. But this is not just Southern California. I mean, we've kind of seen this in other parts of the world. I mean, San Francisco is so much worse.
Yeah.
That Union Square area, they've shut down almost entirely. They don't even let camera crews in there anymore.
Yeah.
So it is kind of a sad. It's just very sad, and obviously it's preventable. But there is a very interesting thing that's happening. People are. I mean, there's an anti-story that is really being purveyed that it's all about equality. Yes, of course, we all want equality. We all want equal access to opportunities. No doubt about it. I mean, my God, my family came here with nothing and bootstrapped themselves. I mean, hard work should equal success, access to success and opportunities. I don't think anybody denies it. Like, no one would hear that and say, "Oh no, that's not a good idea." I think everyone subscribes to that. But when the police are not backed, for example, police can't prosecute. People are being fired, actually, from their jobs in stores if they call the police or try to intervene in a robbery that's underway. You cannot do that in California. If someone's robbing the store, you allow them to rob the store.
Wait, what?
Yeah. No. This is the way it is now. You do not intervene. You can actually be prosecuted for doing that. You can be charged with assault if you put your hands on someone who's trying to rob your store.
Yeah.
So it's gotten really, really weird. And and of course, that's how does that happen? I mean, so you can go down that rabbit hole and try and really figure out why that's happening. But we have government officials and leadership for a reason. I mean, they're supposed to be looking out for the betterment of society and the electorate that they represent. I mean, I think I know too many that live in Southern California that don't feel like they're being represented very well. Yeah. And certainly many people have left. Quite a lot of people, a lot of friends have left. And that trend will only continue.
Yeah, for sure. So we can't control the rules, the laws that are being made in California, right? But we can control our habits and our choices when it comes to money. So I love, Ivan, how just like articulate and straightforward you are. Like you know your shit. It's very evident. So I know you're going to be able to simplify this for the winners. So the people listening to this show, right? They've got some money set aside. They've got a business. You know, they've got some means, right? But they're also getting bombarded with, you know, this real estate investment and crypto and, you know, digital real estate and, you know, precious metals. I saw the funniest shit on precious metals. I read an article and I sent it to my team. So basically, you'll laugh at this, Ivan. So Fox News has a precious metals company, a gold company. This gold company pays Fox like millions and millions of dollars to advertise on Fox. And the precious metals company was selling precious metals at like a 30% rip. So winners, to break this down, if your grandpa Milton had $70,000 in his IRA and he's like, the government's gonna, you know, collapse, Joe Biden's gonna fall asleep, I need some gold, right? And he bought 100,000 worth of precious metals. He's only buying 70,000, right? 30K is going to commissions and fees to this precious metals company, right? So there's like all these lawsuits going on, right? And I just started laughing my ass off, not because people are losing money, but because Fox News and the precious metals company, they know what they're doing, right? Like they are speaking to that audience, right? So, you know, it just comes down to choices, right? We're getting bombarded with all of these different investment options. So what do I do with my money, right? If I leave it in the bank, I'm not making any money. So what are some questions that people can ask themselves to make sure they're making the right investments for themselves?
Yeah, I mean, you're absolutely right. People are bombarded by deals and opportunities, and you know, something that I can't believe we see as much of it as we do. But we see a ton of these private placement offering memorandums, PPOMs. You know, private placements. So somebody's out there, they, you know, found a couple of properties they want to buy and they want to go raise a few $1,000,000, you know, from friends and family and, you know, kind of do that. And nobody has they don't have any experience doing that. They just, you know, came up with this fun idea. It's everywhere. There's a lot of that. And it's just, you know, none of it's proven, none of it, you know, some of it could work out, but most of those things are probably going to be, you know, money losers, not money winners. You know, investing is a very tough business, to be honest with you. And it's not tough because of how you can identify things to be invested in. It's very, very difficult to keep disciplined with a particular choice that you've made. And we call this behavioral finance, behavioral economics. And this is a very real study. I started studying this maybe 30 years ago. And it was kind of at its infancy back then. Only, you know, weirdo finance professors were kind of really involved in it. And now it's become a very mainstream, you know, every university on the planet in their finance department offers behavioral finance, behavioral economic courses. This is kind of regarded as the core thing for people, whether you're a professional or just a retail amateur investor. You are a human being first and foremost, and your emotions are really we're hardwired in our amygdala. That's the Neanderthal part of our brain for two primary emotions: fear and greed. That's it. That's like our most primal, basic wiring.
And greed's not money. The way you explained it to me, and when I just
fight or flight.
Yeah, like greed is like I want happiness. Right? I want to feel good.
Right. Yeah. And so we have this, this very ancient wiring in our biology. And so then you put a lot of bells and whistles on it. You put colors and charts and all these fun gizmos and gadgets around it. And then all of a sudden it's like, ooh, let me go play with these things, because there's also like this neural sensory, kind of pleasure that you can get. Like these day traders really get like this kind of sensory neural pleasure from playing with charts and seeing things in graphs. It used to be if you saw something that wasn't there, we called you hallucinating something. No, day traders actually can look and they see all kinds of patterns and shapes, and they have names for all these different things. And there's actually, market technicians. I mean, it's a whole area of study now. You can tell maybe I'm not a huge fan of that area of study, but enough people believe it that there can be some truth to it. So it's just a very complex thing. So I think as an investor, you have to be very knowledgeable about who you are and what is driving you. It's the same thing like getting in shape and keeping a certain diet or exercise regimen. It's exactly the same thing for investing. You can have them. You can look at a picture and say, "Oh, I want to look like that. I want to have that body." Okay, well, here's what you got to do to have that. And it's not so fun. It's a lot of discipline, and the day-to-day is a grind. It's the exact same feeling with being a great investor. The day-to-day really feels very unrewarding and kind of miserable. So I would say if you're feeling miserable all the time as an investor, you're probably on the right path.
Yeah, because when you're chasing that greed, chasing the new investment, the new, somebody once told me that I thought was a really interesting perspective. So there was a lot of people that were investing into this deal, this opportunity, and a lot of people were. And one person chose not to. And he's just like, man, kind of feels like it's like the cool kids club. And it's almost like, you have to invest in it to be a part of the cool kids club. And he's like, I just don't like that. It kind of gives me a red flag. Like,
wow. That's very profound.
And it turned out that a couple years later, the investment went south, right? So it's almost like creating that kind of cult-like, almost, like I said, gizmos and gadgets.
Well,
right?
Who's like this now is hedge funds, and private equity. Very wealthy people love to be invested in hedge funds and private equity. There's this cachet around it. Meanwhile, when you study how many hedge funds are actually making money for people instead of for themselves as the managers, it's a very small percentage.
Yeah.
A very small percentage actually have return on investment, and very small that do that. Many don't even return the principal. So it is just this kind of. So I think it's very profound what your friend said. It's like this club that you kind of feel like, it's so cool and you want to be a part of it, but really it's just. It's a fiction.
Yeah.
It isn't reality.
Yeah.
And people prey on that.
Yeah. Yeah. I think that's why, don't you think it's important for people when they're looking at investing into an opportunity, a deal, whether it's stocks, real estate, whatever that opportunity is one, you mentioned this earlier, what are the fees, right? Like, how do I make money? How do I lose money? And then are we both on the same side? Right? Because I've been in finance not as long as you have, and you can probably speak to this more profound. So many times deals don't work out for you, but for them, it still works out.
Yep.
Right? They're not on the same team.
Correct.
And how can you end up winning if the person that's like controlling your money, that has that type of power, isn't winning when you win?
Yeah, I love that. I mean, this is kind of like core to a lot of the work I've done, which is if as an advisor, you are putting yourself out in the marketplace and you're saying, people, give me money. I'm going to manage your money. And if you're properly licensed, like a investment advisor representative, you have certain licenses from the SEC, that say, okay, you are a fiduciary. You have this formal dynamic that you have to fulfill as an advisor between you and your client, which means technically the client's interest comes first. It's all about the client. Well, it's a very high standard, and I think a very, very challenging one for a lot of advisors to really even fully appreciate and understand until something goes wrong.
Yeah.
When something goes wrong, then it's like, oh, well, that's clearly a breach of a fiduciary duty. But yeah, I think advisors who are doing good work are being very transparent when they're not delivering what they intend on delivering. Because if you've hired an advisor and they're charging you, for example, an asset-based fee, not a commission. I think commissions are very challenging because someone gives you money, you make money based on placing it somewhere, and then you've wiped your hands clean of the transaction after that. It's a suitable transaction. That's sort of the standard of care that the industry deems it. And so you've made your 5-6-7% commission. You walk away from it. And whatever happens to that money, it doesn't really impact you financially from then on out. So one of the core things I think clients should absolutely understand is how are the people that are telling them what to do with their money, how are they being paid? And even getting that answer out of some advisors, I think, who are making commissions, I've heard the craziest things that they say. Oh, well, you're not paying this commission. The company that is receiving the money, they pay me the commission. It's not coming out of your money. So like an annuity, for example. Someone invests $100,000 into an annuity. The advisor or the broker in that instance would say, oh yeah, you're not paying me. The company is paying me.
Oh shit, the company's paying you. But where's the company getting money to pay you?
Right. And somehow, like the clients, they go, oh, good, because then on their statement, they're still going to see that $100,000. Yeah. So it's not getting dinged. Yeah. But the way the general investment accounts work at insurance companies, the way that the marketing and client acquisition budgets work, it's clearly sourced to that. So it's like a little thing like that really bothers me a lot because it's just not fair to the client. You're really kind of taking advantage, I think, in that instance. But somebody who's being paid an asset-based fee is being compensated based on the value of the account or the portfolio along the way. Some small little percentage along the way. Maybe every quarter they receive some payment for the value of the thing. So if the thing goes up a lot in value, now they're making more money. If it goes down a lot in value, now they're making less money. Well, they're always going to be making money one way or another, but at least that's a little bit better alignment of interests. They're connected at the hip in that way. Yeah. But what I want to see is more advisors being even more clear with their client during those bad periods of education, understanding. Okay, we're down, but maybe we're not down as much as this benchmark, a simple benchmark, not 15 different component benchmarks. Yeah. And why? What did we do to choose our positioning? What was our forecast? What was our outlook? And this is one of my big gripes about the industry today, and this is why a core foundation of what our company does. We have forecasts. We have outlooks. We believe certain things are going to happen in the future. Why? Well, because we're doing research. This is, we have passion. We have brains. So okay, are we going to be right 100% of the time? I highly doubt it. Is that our goal? No. Our goal is to add value to the relationship. And if we're able to add value, then that's demonstrable in the result next to an easy benchmark. If we're not adding value, we got some splaining to do. Yeah. And I think that's the sign of a good advisor, an advisor that's excited to explain why you may be underperforming at different points. Like, there's a reason for that. Yeah. It's because of what you own. And so, but I think the problem and the challenge with the industry is the vast majority of advisors in the marketplace are not managing money. They themselves are not actually managing money in a holistic way across their client base. They've got multiple accounts, multiple different positions, and they're just kind of, trying to do their best. No one's really managing them in big models and being able to make sure everybody's getting the same service. And if they are, they've outsourced that to another company called a Turnkey Asset Management Platform, or TAMP. And the client doesn't even realize that their advisor isn't even managing their money.
Yeah.
And so this is actually so much proliferated in the marketplace now that the SEC just proposed a rule last December. And I had a public comment that was published, and even an article in Financial Planning Magazine about it. I was the only advisor that's for this rule, which is basically, if you're outsourcing investment management work, the client has a right to know. For some reason, nobody wants the client to know this. No. Don't tell them we're outsourcing it, because we like our 1% for doing nothing. I mean, all right, it's not nothing. They handhold. Yeah. They're handhold.
Well, here's a statement. They'll send a statement out.
Of course. Yeah. But also when the client gets panicked, they're handholding, telling them to remain disciplined, stay, keep
Don't
it,
sell.
which is actually, that is a verifiable value. There's an advisor alpha. Great studies have been done by firms like Vanguard calling it advisor alpha. And there's actual value to having somebody around that says, no, don't sell, stay the course. Okay, but is that worth 1%?
Yeah.
So I think that's where, we're supposed to be as advisors, is really kind of question, well, what is the value we're actually connecting people to? What is the work we're really doing? And are we being paid fairly for that work? And so at our, at my firm, we're saying handholding isn't enough. Why not have actual beliefs, actual outlook, actual put your money where your thoughts and research are, which is kind of like the way it used to be maybe 50 years ago in our industry.
Yeah.
When stockbrokers used to pitch stocks, they'd call up, Milton and say, hey, I've got this great stock.
Radio Shack.
Right. RCA. I've got this company, you got to get into it, and it's like, at least there was some kind, but of course that was their product at the time. So I don't want to confuse these things, but at least I felt like there was more intent to add value to the customer experience. Yeah. And if you screwed it up, you lost business. Yeah. That's kind of the way it's supposed to go.
There should be consequences.
There's consequences. But for most advisors, there is not consequences. When the markets go down, oh, well, your portfolio's down too. It's okay. Yeah. It's like, no, aren't you supposed to be like doing better than what the market does? Otherwise, I could just go buy a couple of exchange-traded funds and spend a fraction of the money. Of course, I won't have you around to coach and discipline me when I need that, but maybe that's worth, 30 basis points, not 3 times that. And by the way, some advisors are already hip to this thinking and already pricing their services accordingly, significantly reducing their costs when they know they are connecting a client with just a pure indexed type solution. And I commend them for that. I think that's
the right move.
That's the right move. Yeah. It's exactly what you should be doing. But don't pretend that you're doing something when you're not. Yeah. And so I'm happy to see the regulators getting involved in that.
Yeah. What are your thoughts on crypto? I'm really curious because you have that experience with monetary policy and economics and, being around some really, really smart people in your family. And then you've been in the financial world for, damn near 20 years. So I don't see you being this super, super rigid thinker that is against technology, but I also see you, being conservative and being realistic and not just jumping onto the new fad, right? So I'm generally curious to know your thoughts on crypto.
I mean, I'll say straight away, we don't have any exposure to cryptocurrency in that form. Yeah. Either outright or even personally, I don't have any exposure to it. To me, the underlying technology is phenomenal. The blockchain technology and what it's capable of doing is kind of revolutionary for all industries globally. But that's an application of a technology. And so somewhere along the way, it became, or tried to become, well, certainly it has become this. Whether it is a legitimate thing or not is going to be a hindsight tale. But is it a true store of value? And that's a very, very hard thing to deem it at this point, because there's supply, there's demand, and that's typical of a currency situation. The U.S. dollar has supply. That's what monetary policy is. It's all about the supply of money and the demand for money. When you have inflation, I mean, I always describe inflation as a very simple thing. When you have a lot of money chasing a limited supply of goods and services, that's where you get inflation. So when you inject trillions and trillions of dollars into an economy and you wonder, how did we get all this inflation?
Imagine that.
I mean, it's a game. It's a total joke. Everyone knows exactly that they created it. Of course, the central bankers know exactly how it was created. They just feign naivete because that's just the game. That's what you have to do. But crypto, I would be very suspicious of it. It just, and then people ask about gold also, or like precious metals. And my kind of default for that is, if you're going to own it physically, wear it, keep it in the safe, because if you really are going to need it at some point, you're going to want it physically. Don't buy it in paper format or try and trade it in some way. Don't buy it in a derivative form. Buy it in a physical form. And crypto cannot be in a physical form. So yeah, it's way too complex to have the valuation and all the excitement around it that it does have.
Yeah.
And there's a lot of bullish people around it. I'm just not exactly sure where it goes from here.
Yeah. Interesting. Well, Ivan, this has been a really, really good conversation. I appreciate your time here. Winners, I encourage you to go check out Ivan. You guys can tell, he definitely is someone that has a lot of experience. You can see that he's passionate about what he does and really cares about people. I think most financial advisors, if I were to have 9 of them come on the show out of 10, most of them would get defensive and probably evade some of the questions and not say what Ivan's saying, right? He's pretty much telling you guys some of the dirty things in his own space, but he's okay with that because obviously you can see that he conducts business a completely different way and just has a different set of standards, which I really, really respect.